Okay, hello. So good evening, everyone. Okay, so we stopped here yesterday. So I'm going to reiterate what I said yesterday. Okay, so permit me to delete all this, then start again. Okay, all right, all right. So now we talked about market structure and the concept of liquidity. Now, we said that we have three types of market structure. We have the uptrend, we have the downtrend, we have the consolidating markets. Okay. So then the concept of liquidity, we have the dynamic and static. Under the static, we have the internal liquidity and the external liquidity. Under the dynamic, that's where we have the trend lines, right? Okay, so now we started with an example on the chart yesterday. Okay, now we said this is AI. The price starts with the market starts from somewhere. It starts with a high and a low. Okay, so before then, let me reiterate something. A sell is confirmed when we have two moves like this. When we have this kind of move, a low, a high and a low, then a new high that is lower than that previous high, and a new low, right? Something like this. A high, a low, a higher high, lower high, a high that is lower than this previous high, and a new low that is lower than the previous low, right? And we said the buy is also confirmed when we have a low and a high, then a new low that is higher than this previous high, this previous low, then a new high that is higher than the previous high. So this is a low and a high. A new low that is lower than this previous low. That is higher than this previous low, and a new high that is higher than this previous high. So this is what make a confirmation in a buy. So if I only see a 1 point, a high, then that means there's a tendency that price might still go against me. So the best thing I can do is just to wait for price to finish what they're doing, right? Okay. So now let's come again now. Let me show you. Okay. Now let's come again. Let me show you from here. So we have a high, we have a low. We have a lower high, a high that is lower than the previous high, and a new low that is lower than the previous low, right? Then we have a high that is lower than the previous high, and a low that is lower than the previous low. Now we have this high, but something happened. We have a high. It didn't create a new low that is lower than this low. So we can call it a lower high. It is actually a low, but not, a high rather, but it's not a lower high, right? Because it didn't create, uh, it didn't actually create a high that is, it didn't actually create a low that is lower than the previous low. So hence we call it a high, but not a lower high. Now, the last range for price is between here and this low. So you can see that price is moving or moved for weeks without a specific direction. So this is what we call consolidating market, right? Now, you will now see that this market came to break the came here to close above the previous high. Yes, it is a break of structure. But as I said that if I want to confirm a buy, I need a high and a low. Then I need a lower high, higher low and a higher high. Something like this. But if you look at this, we only have now this is the low that propelled the sell. I mean the buy, and this is the buy, right? That broke the structure. Now, are we bullish or are we bullish? Maybe this is now a maybe statement that we might be bullish and we might not because I need this form of signature. This is a signature not entry now, signature move, right? To identify if we are bullish or not. So now we have a low, we have a high. So I need to see a low that is going to be higher than this previous low and a high that is higher than this previous high. But that never happened, right? You will see what happened. Created this low, then now later broke below this. The moment you see a break now, that means yeah. The moment you see a break, it means that the price wants to continue bearish, right? The price wants to continue bearish. So the best thing you could do for yourself is just to start looking for sales. Look for more sales rather than waiting for buys that you might not see, right? So okay, now this is it. Look at now what now happened. If you measure from here, if you use your Fibonacci to measure from this high, right? Let me take this out. It didn't show well. Okay. From this high right here to this low, you will be able to determine. I say anywhere below a 50% is going to be liquidity, right? So price will likely go above 50% of the Fibonacci. It could be 50% of the dot. It could be higher than 50%. So anyone, you don't need to memorize that. Now, the best thing you can do for yourself is to start looking for sales to continue. Look at this. This is a form of liquidity because this was a previous low, right? This was a previous low. So look at how price traded towards it. Traded very close to it. Very close to it. Look at very close to it here. Very close to it here. But he never took it. So you should know that there's money here. People bought here, people bought here, people bought here. So there's money lining up around here, right? So the best thing you could do for yourself is to look for sales, look for sales anywhere you could see entry right here, and take the liquidity, the next low. After taking the next low, calm down and wait to see if they are going to give you another sale, right? Now, but anyways, let's continue. Now you could see how price broke structure to the upside around here, broke structure, created a new low, broke structure. Now, this is it. Look at another concept of liquidity, right? Now, a lot of people will have been looking to, let me use something else. A lot of people will be looking to sell or to buy from here. Let me use this rectangle shape. A lot of people will be looking to buy from here, right? Not knowing that they might likely be in a wrong move. As I said 50%, 50%. Anything that is lower, that is higher than 50% can be used as liquidity. Look at the move, right? When this guy retraced, here, he didn't come to 50%. This was what I said yesterday. So I didn't come to 50%. So everything under it is a form of liquidity. Look at what they now did. They came very way down to around 90 something. That is 0.9 something. That is like 90 something percent before they moved. So it means that it just to confirm what I said, below anything below 50 that anything above 50% for a buy can be used as liquidity. So the sales that you saw here, the sales that you saw here were probably propelled from the monthly. But look at what now happened. Price now also broke structure to the upside. It broke structure right here. Eh? Then that was how we continued moving. Now look at something again. Let me show you this. Something again right here. Look at this. Let me delete this one. Look at look at the concept of liquidity. Look at liquidity. One candle. Look at it. They took this high. Look at how price took the low and started buying. Look at that same candle. Can you see it? That is one candle liquidity that I said. There's you can see a single candle can be used as liquidity. Now look at how price took it and started buying massively instantly, right? Look at then what happened again? Single candle. That is what propelled. That is from there we just started buying. Just started buying. Look at structure. Look at structure. But the structure is not really that much that obvious. Yeah. Let me go to 4 hour. You will see lot of structure right here. Look at. Let's start from here. Let's start from. Oh, the thing is okay. Let's start from here. Let's start from here. So as we said, price always begin from somewhere. It starts from somewhere, right? We have a high, we have a low. We have a low, the high, and we have a low. Now this is now the lower high because it's created a new low that is lower than the previous low, right? So the moment that happens, we are in a sell, right? Now, as I said, use your Fibonacci to know where you are going to sell from. I think I was in this particular trade. This was April. I think I saw this particular. Yeah, I think I saw this particular trade. Right? Okay. Now use your Fibonacci. That is the concept I'm using. I'm doing the two now. Liquidity and structure. Now look at where the concept of that is 50%. Look at it. Right? If I go to 1 hour, and if I go to 1 hour, you will see lot of this one candle that you see here. This one black candle that you see here, you might see price action like lower high, lower low on the 1 hour or 30 minutes or 45 minutes, right? But look at what price later came to do. They came above there. Look at one candle liquidity. Let me show you one candle liquidity. My set of entry. Look at it. This is where I enter from. Look at then look at what they did. They did a single candle liquidity. Single candle liquidity. Can you see it? So the next line of action will be that I will be looking for them because we are now in a sale. The next line of action is to take this low. This low. Can you see what price later did? Because there's money there. Look at what price did. The moment it took that low, look at how it bought. It gave a repulsive move for a buy. Now, anybody that said he wants to continue buying here, is doing himself, right? Because we are actually in a sell move, right? We are selling. Look at what price did again. Price went down totally, like it came down. Now look at the sell. This was the high that broke this low, right? So if I use Fibonacci, from sorry please. If I use Fibonacci from this high right here to this low, you could see that this place, this buy, didn't get to the 50%. Right here, this place, it didn't get to the 50%. So this, I know that price will likely use it as a form of liquidity. So I won't want to be looking for a sell there. I know. So all I'm going to be waiting for is to wait for price to go above it, create a form of liquidity and start selling, right? And start selling, and exactly what they did. Look at what price did. Price took that high. Now look at the liquidity they captured right here. Price captured liquidity. The next thing you should be aiming for. Forget that. See, it's not because it has played, right? I can show you exactly what some of these trades, right, before it played out. I will show you. I will show you some. Probably, maybe with time, I'm going to show us how the concept of liquidity works with market structure. Now, you could see that the moment they took this low, look at how price started going back up, right? So that is what we call the concept of liquidity. The moment price took the liquidity, the market makers bought, right? And they bought massively. Look at they broke structure. But I said it that if we want to buy, we need to see two highs. Like, do you get? We need to see a high and a low, and a new high that is higher than the previous high, and a low that is higher than the previous low. That is what will confirm a buy. Anything else is not a buy. Do you understand? Now, that is what happened. And look at how price was consolidating before they broke. But where was the last place what was the last place that propelled the push for a buy? It was here. It was here, right here. So look at when they came to break it. It took them days. But look at when they came to break it and look at what happened afterwards. Right? Price started selling. Price started selling. Yes, it didn't close, it didn't come above, like it didn't come above 50%. But look at this one still. This one now broke below this guy again. So this become your new high and your new low. So anything you want to do, you should be doing it in this range, like this range. Then look at what happened. That and we kept selling. Low high, we kept selling, right? And we kept selling till this moment. Now, let me tell you something. I took something. Let me show you this other chart. I took something last week, right? With the same concept of liquidity. Now, it was from here. It was from here.